Hello everyone, welcome back to my channel Moving to the Georgia Mountains. My name is Toby and today we've got a very important topic to discuss. Taxes as they relate to real estate and real estate transactions. It's a crucial part of the real estate world and can make a big difference in your bottom line, whether you're buying, selling, or investing. So let's dive right in. First, we have property taxes. These are levied by local governments on homeowners. The amount you owe will typically depend on the assessed value of your property. It's an ongoing cost that you'll need to consider when budgeting for a home. Should you receive an assessment that is significantly above what you think it should be, it is always a good idea to challenge the assessor's findings. Next up is capital gains tax. This is a federal tax that applies when you sell a property for more than you bought it for, meaning you've made a profit or gain. There are, however, exclusions and strategies to reduce the impact of this tax, such as Section 121 exclusion for primary residences. There's also Depreciation Recapture Tax. Now this one mainly applies to investment properties. When you own an investment property, you can take a tax deduction each year for the depreciation of the property. However, when you sell, you may have to pay back some of those deductions through Depreciation Recapture Tax. Don't forget about real estate transfer taxes. These are taxes imposed by some states or municipalities when the title of a property is transferred from one person to another. The specific rates and rules will vary depending on the location. For those looking to invest in rental properties, bear income tax in mind. Rental income is considered taxable income and must be reported on your federal tax return. But you can also deduct a lot of your expenses, including mortgage interest, property taxes, maintenance costs, and more. Then there's the estate tax, sometimes known as death tax. This is a tax on your right to transfer property at your death. It's calculated based on the net value of your estate, which often includes real estate holdings. And finally, we have the gift tax. If you decide to gift a property to someone else without getting fair market value in return, the IRS may see this as a taxable gift. However, there are significant exclusions available that can limit or eliminate that particular tax burden. That's a broad overview of the different types of taxes related to real estate. Tax laws are complex and they change frequently, so it's always a good idea to consult with a tax professional to understand how these taxes might apply to your specific situation. Thanks so much for joining me today. If you found this video helpful, don't forget to like, subscribe, and share it with others who might benefit. I look forward to catching up with you in the next video. Until then, stay savvy with your real estate decisions and dare to dream big.